The moving average convergence, divergence, MACD, is one of the most popular and effective technical indicators used in binary options trading. It helps traders assess the momentum and potential trend reversals in the market by analyzing the relationship between two moving averages of an asset's price. The MACD is calculated by subtracting the longer-term exponential moving average, EMA, from the shorter-term EMA, typically using a 12-period and 26-period for the short and long-term EMAs, respectively. The result is the MACD line, which fluctuates above and below a zero line, providing insight into the strength and direction of the current market trend. The signal line, typically a 9-period EMA of the MACD line, is then plotted above or below the MACD line to help identify potential buy or sell signals. In binary options trading, the MACD is used primarily to spot trend reversals and market momentum. When the MACD line crosses above the signal line, it is considered a bullish signal, indicating that the asset's price may rise, which could prompt traders to place a call option. Conversely, when the MACD line crosses below the signal line, it is seen as a bearish signal, suggesting that the asset's price may decline, which could lead traders to execute a put option. One of the key advantages of using the MACD is its ability to show both the strength and direction of a trend. A strong upward trend is confirmed when both the MACD and signal line are above the zero line, while a downward trend is confirmed when both lines are below the zero line. Additionally, the distance between the MACD line and the signal line can help traders assess the momentum of the trend. A wider gap indicates stronger momentum, while a narrowing gap suggests a weakening trend. Another important feature of the MACD is divergence, which occurs when the price of the asset moves in the opposite direction of the MACD. For instance, if the price is making new highs, but the MACD fails to follow suit and starts to show lower highs, this could indicate a potential reversal or weakening of the trend. This type of divergence can provide early signals for traders to enter or exit trades. While the MACD is a powerful tool, it does have limitations. It can produce false signals, especially in choppy or sideways markets, where there is no clear trend. To mitigate these issues, many traders combine the MACD with other indicators, such as Relative Strength Index, RSI, or Bollinger Bands, to confirm the signals and increase the accuracy of their trades. Additionally, risk management strategies like setting stop-loss and take-profit levels are essential when using the MACD to avoid significant losses in volatile markets. Overall, the MACD is a versatile and widely used indicator in binary options trading, providing valuable insights into market momentum and trend direction when used correctly.